أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. How are you all? Very good. Welcome to our 9th week. So we're going to continue our discussion of auditing the human resources. We have done the client side of the activities, and we have done the testing of the inherent risk, and we have done the test of controls. So our next step is to look at the numbers before we do the substantive procedures, and this is called the substantive analytical procedure. Here we have two sets of accounts. The first set is the payroll expense accounts, like salaries expense, payroll tax expense, pension expense, and then we have the payroll related accrual accounts, which are payable, salaries payable or accrued salaries, same thing, and then payroll taxes payable, pension payable. So what we do first here is compare the current year with prior year payroll expenses, and we also look at the current and prior year's payroll as a percentage of sales and industry data. So let's take a look at what we mean by that, what we mean by looking at this using a real set of financial statements. As you see here, I follow my arrow, we have the cost of labor. As you see, these numbers on this column right here, 47,386. Do you see that number, my arrow beside that number, 47,386? Do you see that? All right. Now, that is 2020's number. Okay, so if you go up, you will see this is from 2020, right up here. And then this number is 2019. So we look at this year and compare them with the prior year. So 47,000, 45,000, not a big difference. 108,000, 104,000. So these are different payroll expenses, hourly driver salary, hourly inside, hourly management, overtime, etc., etc. So if you compare these numbers, just the numbers, they look reasonable. If there is a big difference, then there is a question. There would be a question in our mind, why is that? Second, we look at the percentage. So this number, 47,000, is 18% of the total wages, which is 259,000. So if you divide 47,000 with the 259,000, you will get 18%. This 18%, this was 19% last year, not a big difference, right? Percentage-wise. And also, as for the industry is concerned, the industry number is also in the neighborhood. It should be 20%, 20% for payroll expense, and another 2 to 3%, maybe 4% for payroll taxes. So if you come down here, the 291, this includes all the taxes. As you see on the left side, taxes, employer share of FICA, taxes, state unemployment, federal unemployment, etc., etc. So all of these are additional payroll expenses. These percentages, you have to know the industry average to see whether they're reasonable or not. So we look at two things, this year compared to last year, and then we also compare the percentages compared to this year compared to last year, and we compare them with the industry numbers. So this number should be in the neighborhood of 25%. So as you see, last year it was very close to 25%. This year it's a little bit less, but nothing that would raise a red flag in my mind. Okay, so it's still within reason, which is a reasonable amount. Are you following? Is that clear? So we go back here, we look at this current year with prior year's payroll expense, current year with prior year's payroll as a percentage of sales, and industry data. Okay, Then we look at labor utilization rates and statistics with the industry data. What is labor utilization? How many people you have and how many of them are working at any given point in time. So let's say you have 100 people and 95 of them are working. That means you have 95% labor utilization. Not any single point in time are 100% of your people working. Some of them are off, some of them are on vacation, some of them are on sick leave, etc., etc. So there is an average industry utilization percentage for every industry, for oil industry, for uh, manufacturing, for uh, service industries, different types of industries. They have different labor utilization rates. You compare, and this data the client will be able to give it to you, and you can compare that with the industry numbers to see whether they are reasonable or not. And then you look at the budgeted payroll expense with the actual. So whatever was budgeted, let's say $1 million was budgeted and it's 1.1 million. Okay, no big deal, right? But if it is too high or too low, the difference is a big number between the budget and the actual, then that's a question mark. Is there something wrong in the calculation of the actual, or did something go wrong? So this is a question you keep in mind. And again, we don't answer many questions at the substantive analytical procedures. We raise some questions for us to take to the substantive procedures. So we keep them in mind as we go into the substantive procedures. Then the next thing is estimate sales commission with formula and recorded sales. So sales commissions are paid based on certain formulas. So let's say the client has a formula that everybody who sells a Land Cruiser would be paid 10%. Everybody who sells a Toyota Camry will be paid 5%. So there are formulas for calculation. You use their formulas to calculate the numbers and see whether they are reasonable based on the expenses they have recorded, right? To make sure that the numbers are in the neighborhood of where they should be. And again, we don't know if there is a mistake, even if the numbers are unreasonable. We just have a question in our mind as we go into the substantive procedures. The second set of accounts are payroll-related accruals or payables. Compare current year with prior year balances and test reasonableness of accruals. So current year with prior year payroll balances, if we go to the balance sheet, we will find the payables recorded. This year's payables are recorded, and we can compare them with last year's to see if they are close. And then we also see the reasonableness of accruals. Remember, for payroll, you cannot have more than 1 month's salary as payable because you have to pay every month. If you don't pay every month, the employees will leave. So if you see that the payroll, let's say for a month is 50,000 and there is a payable recorded and the balance sheet of 150,000, that means that's 3 months payroll payable, and that cannot be. That's unreasonable. So there must be some mistake in the recording of the financial statements. Does that make sense? This is a payable you cannot go without paying. You must pay the employees every month. Are you following? Are you there? Okay. Very good. Now, once we have done this, we go to the mother of all procedures, and that is the substantive procedures. We look at the transactions and the management assertions related to those transactions. The first thing we do is test the occurrence. Vouch a sample of payroll checks to the master file, to the master employee list to verify validity. What we want to know that everybody who received a paycheck, which is a payroll check, who is working for the company actually is an employee and has a master file in the company. So you take a sample of payroll checks and we go to the master file to see every single one of our payroll checks in our sample has an employee master file. Every single one of these employees who got paid has a master file. That means we know that this is an actual employee, right? So when the payroll was recorded, it was actually paid to a real employee and not somebody who no longer works here or some fictitious employee. Is that clear? The next thing we test is completeness, where we trace a sample of timesheets to the payroll register. Timesheets, remember, show us the amount of work done by an employee during a pay period. We take those and we compare them with the payroll register. Payroll register shows us a list of all the employees who got paid. So every timesheet you have for that pay period should correspond to a payment to an employee, right? And the beauty of payroll is, for the completeness, the beauty of payroll is that the employees would raise a question if the employee was not paid. Nobody would just sit there and you don't pay somebody and they continue to work hoping they will get paid next month. If you have an employee who uh, did not get paid, they will come to you and say, I didn't get paid for my work this month. So the completeness would be caught by the employee. Now, still after getting paid, it is possible for the accountant to not record the payment. So that's possible. But as for payment, the employees are going to catch that. This is special for the payroll, human resources and payroll account, right? Not other accounts, because you can go without paying the supplier for 3 months, right? You could have an accounts payable 3-month old. It is possible because the supplier could have an accounts receivable 3 months old. It is possible, but you cannot have a payable in the salaries that's 3 months old. Is that clear? The next is testing of authorization. Test a sample of payroll checks to see that they were properly authorized. So there is a process of signing or approving at the client's location. You want to make sure that the process was followed and every single payment was properly authorized, right? The next is uh, recomputing a sample of payroll checks for gross pay, deductions, and net pay to test accuracy. Now, every single employee's payment was calculated. The gross is the total amount of salary. The deductions are those taxes and other items that are reduced from the gross pay, and the net pay is the amount that the employee gets paid. Now, the calculation could be very complicated in some cases, and you want to make sure that you recalculate a sample of checks to make sure that the calculation was accurate. Let's take a look at an example. You see this number in box 3, right? Do you see my arrow? Box 3. How much is the number in box 3? Social Security wages, how much is that number? $95,322.91. Now this box 4 number, Social Security tax, it's calculated based on the number in box 3, and the calculation should be this number in box 3 times 6.2%. So do this calculation, check their accuracy. Multiply this 95,322 times 6.2%. What do you get? What is the number? Right? 5,910, right? So they have done it accurately, right? Do the next number. Multiply the same number in box 3 is the same number in box 5, 95,322. Multiply that with 1.45%, and that should be the number in box 6. See if they're accurate. What is the number? The number is accurate, right? So they have, for every employee, there are multiple calculations like this, and you want to make sure that they have calculated these numbers accurately for a sample of payroll checks. Is that clear? You're following what we have to do here? Okay, let's go back to our slides. We'll be going back and forth quite a bit today, inshallah, to show you real examples. Okay, so here we have the accuracy. So we recompute some numbers to make sure that they are recorded accurately. Then we have cutoff. We take a sample of timesheets, right? We take a sample of timesheets, and we want to make sure that the timesheets are recorded as expenses. The data on the timesheets are recorded as expense in the period. So if we have a set of timesheets for December, they should have been recorded as an expense in December. If we take a sample of timesheets in January, those should have been recorded as expenses in January. So this is easy to do. You don't have to do the whole year. You can just go to December. We don't want to have any expenses from December recorded in January, or anything that is an expense for January recorded in December. So we want the cutoff, the year-end cutoff. Okay, very easy to do. Timesheets, remember, are those documents that show the amount of work done by an employee for that pay period. Is that clear? Are you following? Then we have the classification, which is a sample, examining a sample of checks for proper classification into the expense accounts. And you just saw the financial statements, how many different types of expense accounts there are in the payroll category. You saw the payroll expenses and then the payroll tax expenses, right? Many lines. Those are individual accounts where expenses should be recorded. So you take a sample of payroll checks and you want to make sure that it's recorded in the right account. So for example, let's go back and look at something here. If we come to this financial statement, you see there is a number that says on top of this category, it says taxes, employer share of FICA. Do you see that? FICA, F-I-C-A, right? See that? FICA, F-I-C-A. This is where the Social Security and the Medicare taxes, the 6.2% and 1.45 that we calculated, that should be recorded. So there is an account in the general ledger that says employer share of FICA. That's where the number should be recorded. Okay? So when we take a sample of checks, we want to make sure that they are recorded in the right account. Okay? And payroll could be, payroll calculation could be rather complicated, and I'm going to discuss this. I'm going to show you the complicacy of it a little bit more. So here we have taking the sample of payroll checks, and we want to make sure that these items are recorded in the right account. Okay. Next, so the first two set of management assertions we looked at were about the transactions, related to the transactions. Then we go to the balances, right? Existence is the first assertion we check. Vouch selected accruals to supporting documents, payroll tax returns, and corporate benefit policies. So here now we want to look at the documents that support the number on the financial statements. So for example, when we talk about balances, we're talking about payables. We're talking about the payables recorded on the financial statements. So let's take a look at this number right here that is recorded on the financial statement. We go down, we go up to the balance sheet, and you see this number right here that says accrued workers' compensation policy end date December 31st, 12/31, 1,363.67. Do you see that number? Okay. Now, this number is backed up by a document which is the workers' compensation policy. The client would have a workers compensation policy. You're going to ask for that, and you will see that the workers' compensation policy actually supports this number. You will find documentation that would say that this should be the number. And again, what is workers' compensation policy? How is the calculation done? It's very complicated, and usually students do not learn that. Even in the US, I had no idea how to do that when I was a student. But to give you an idea how you should do the work when you're auditing is when you see something like this, there is a document that shows two things. Number one, the number is calculated correctly, which is existence. This policy is actually real. They actually have a policy like this. It's not something bogus. The second thing is rights and obligations, which is on the slide, and I'm going to go back to that, which shows that this workers' compensation policy is actually your clients and not some other companies, right? The company could be a subsidiary of another company, or it could be a parent of another company. It belongs to the company you're auditing and not any other company. Okay? Are you following? So when we come here, we see that it exists. The second thing is the rights and obligation, which is review supporting documentations to determine that the entity is legally obligated to pay the liability. So it is not someone else's liability, but it's the liability of your client. Is that clear? Okay. Then we go to completeness, where we search for unrecorded liabilities. Now, this is some liabilities, some payables may not be recorded, especially the retirement payables. So where we find this information, we go to the employee contracts. If you can take a look at a sample of employee contracts, it will say what the retirement plan is, what the end of service payment is, and those liabilities should be recorded in the balance sheet. And if you find that there should be some recorded liabilities and they're absent, they're not there in the financial statements, that means the financial statement, that account is unfairly stated. Okay, so search for unrecorded liabilities in those documents. The next is valuation and allocation. Obtain an account analysis schedule for accrued payroll liabilities. Now, the accrued payroll liabilities are those that relate to the salaries and the accompanying taxes related to those salaries. This, I showed you one employee's calculation. This is done for every single employee for every single pay period. So you might have thousands of employees working at your client, and 12 pay periods. So the client would prepare the calculations in a spreadsheet where they would make sure that the calculation of these payroll liabilities are accurate. But you have to go and make sure those calculations are correct. So you will obtain an account analysis schedule for your accrued payroll liabilities, and you will recalculate the schedules for the accrued payroll liabilities. And just to give you an example, if the company is in the US, they would have federal income tax, state income tax, city income tax, county income tax, federal unemployment tax, state unemployment tax, workers' compensation, uh, social security, Medicare. Or I just told you 9 or 10 items. This could be very, very complicated, right? To make sure that these calculations are correctly done. And again, this, you will become, over time, you become an expert of all of this, but this has to be done to make sure that the items are recorded correctly. And then you compare amounts accrued to supporting documentation such as payroll tax returns. So these payables come from the payroll tax returns that are prepared. And I'm going to show you an example of a tax return, an income tax return, not a payroll tax return, but they look, similarly complicated. So if we come here, look at this. This is a part of a tax return. The document is 18 pages. Do you see this? Do you see the numbers? The document is 18 pages. This is just one part of one page. So just to give you an idea, just look at line 6. Follow line 6. It says total income, right? It says total income, add lines 1 through 5, add amount from schedule 1, line 22. Go to line 7, it says adjusted gross income. If you have no adjustments to income, enter the amount from line 6. Otherwise, subtract schedule 1, line 36 from line 6. Do you see that? Is it complicated, or is it complicated? Tell me. This is just part of one page. This tax return that you're looking at is 18 pages. So all the numbers that they have in the financial statements, in the balance sheet, are supported by some payroll tax return. Okay. Now, it looks complicated to you, but if you work in this capacity, you will do hundreds and hundreds of them, and it will become simpler and simpler for you. But just to give you an idea, and you may not ever do this if you don't work for a company, or audit a company that has business in a country where they have all these types of different kinds of taxes. Okay. So we come back. In Qatar, no, I don't think we have anything, because the taxes are simple, individual. There are no individual income taxes in Qatar, so that automatically makes life really easy. But if you have a company that is doing business in Qatar, and the company is also doing business in UK or Australia or US, then you might, if you're auditing that company, then you might have to handle these documents. You follow? So you don't necessarily have to go to those countries. You could be working for, auditing a multinational company, and you will learn this, and it will help you. If you learn these, they will, expand your knowledge base. Okay. But again, you don't have to worry about the difficulty or the complicacy of these, because you will start slowly, and eventually, for example, preparing a tax return like that is uh, not a very difficult task for me, not because I'm a genius or anything, but I have done hundreds of them. So once you do 100, anybody who does 100, hundreds of these, maybe I've done a few thousands. So when you have done that many, it becomes easier and easier and easier. All right. Does that make sense? It will become easier. I'm an average individual, so for an average individual, it's not difficult at all. All right, is that clear? Okay, so we will stop here, inshallah. Our plan is to finish chapter 12 on Tuesday and give you the quiz for chapter 11. And then if we finish chapter 12, we'll take off Thursday. Okay, we'll start our break. All right, any questions? Anything you want me to explain, re-explain? All right, if not, I will see you on Tuesday, inshallah. Assalamu alaikum wa rahmatullahi wa